Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario where we're looking for a 5-wave impulsive structure to the upside, where the common target for your wave 4 is between the 0.236 and the 0.5 Fibonacci, taken from the low of 2 to the high of wave 3. This gives you a target area between 63.8k and 61.3k, with the invalidation being the 0.618 at 60.2k. After wave 4, we're looking for a 5-wave impulsive structure to the upside in a wave 5. To finish a bigger impulsive wave 1, look for a corrective structure down and then continuation to the upside. The second bullish scenario is an already finished impulse to the upside, 1, 2, 3, 4, 5 wave structure, looking for a bigger retracement to the downside in a wave 2. First shared by Samith in Discord in the Golden Elliott Waves channel, 1, 2, 3, 4, 5, looking for that wave 2. Nice coloring of the fibs as well, because the 382 is an uncommon target for 2 and the 886 is a rare target for a wave 2. The common target is the 05 to the 786, which is between 59.8k and 56.2k, with the 382 at 61.3k and the 886 at 54.9k. The bullish scenario on the 15-minute time frame is a 3-wave corrective structure to the downside, where both for your wave C and wave Y, your most common target is between the 1 and the 1.236 trend-based fib extension, taken from the start to the end of A or W to the end of B or X, giving you a target between 62.8k and 62.3k, which is in nice confluence with the 6-hour gap top as well and the double bottom that we have here. So therefore, it is an interesting area to look for support, a bit of a range, signs of strength, maybe some bullish CVDs, and look towards the upside. Now, what is interesting is that the scenarios that I have just shown on the 1-hour time frame work with this scenario. If we're looking for a wave of 4, then this 3-wave corrective structure can be a wave 4, and we look for a 5-wave impulsive move to the upside to finish wave 5 and look for a bigger retracement to the downside. At the same time, a zigzag or a double zigzag to the downside in an ABC or WXY can also be labeled a wave A. Look for a wave B to the upside for then an expanding flat ABC, which is a scenario that could fit in a bigger wave 2 towards the downside. Now, in this structure, you can see that price here moved towards the downside and then started ranging sideways. If we are looking for a 535 ABC, then as mentioned, your common target is the 1 to the 1.236, which we haven't reached, and this range over here is quite long compared to any wave 2s in this move towards the downside. So preferably for an ABC, your low would be in here. However, you can see that this is quite a short move, didn't reach the common target area, only the 0.618, which is a rare target for C, so it would decrease the probabilities for the ABC, and therefore the WXY scenario would have a higher probability, which was a scenario that Overset Tim also shared in the public Bitcoin Elliott Waves channel in Discord. So very, very nice. Tim, I forgot to put your name on my chart, but I have seen the WXY that you shared in Discord. Now, in this case, we then have our second leg towards the downside here, and you can see that price pretty much touched the 886, taken from the low to the high of this move, and the 886 is always important because the moment you touch the 886, and we are very close, we actually just missed out by a few dollars, but the moment you hit the 886, the probabilities increase for price to take out the low, because the 886 is rare for a wave 2, common for a wave B or a wave X, and therefore any move towards the upside has a higher probability of being a wave C or a wave Y, which therefore increases probabilities to still take out the low. However, if we do look at a double zigzag with a 3-wave ABC and W, complex structure in X, and another ABC to the downside in a wave Y, then usually the 0.382 would be a minimum retracement target for a B, and then a wave A, B, and then a wave C towards the downside. So potentially a move up to 64k minimum is on the cards for then continuation down, but in all of the cases, the probabilities are higher to still move towards the downside. The bearish scenario on the 1 hour time frame is a finished 3-wave structure in an ABC zigzag, diagonal in A, B finished, and then a wave C towards the upside, 1, 2, 3, 4, 5 wave structure. The 1.618 is a target for a wave C. You can see we just missed out on hitting it, but the moment you approach a 1.618, it does increase probabilities for a wave 3 compared to a wave C. Again, it is a target, but it's all about probabilities, right? Now, if you then look at the most bearish scenario, then after a wave C, you're going to be looking for price to move impulsively towards the downside. So on a 50-minute time frame, preferably we are then looking for a double 1-2, where we have an expanding diagonal structure in a wave 1, which is a very rare structure, right? An expanding diagonal is a lot less common than a contracting diagonal, but we can't count this anything else. So it does lower the probabilities a bit for this scenario. We then have a wave 2, which hit the common target area for a wave 2, so that's perfectly fine. And then we have another leg towards the downside, and preferably for a wave 2, move a bit further towards the upside, because the common target for your 2 is the 05786 between 64.2k and 64.7k, with the 382 being an uncommon target. If price is not going to reach the 382 as a bare minimum, the probabilities do increase for the corrective structure to the downside that I have just shown, the WXY for example, because not retracing to at least a 382 would be more common for a wave B compared to a wave 2. So in other words, it would give some more probabilities to a bullish scenario. Now, in this scenario, after 2, we're then looking for strong continuation to the downside. We want price to move towards the downside with increasing volume. And also now, price has touched the 886. So while recording, the probabilities are now higher to sooner or later take out that low. What I shortly want to cover is this range here for educational purposes, because it's all about probabilities, and when this range continued, as mentioned during the stream, the probabilities started to increase for price to take out the lows. First of all, we touched the 886 during the first retracement to the downside, increasing the probabilities, and the move up is a corrective structure, increasing the probabilities to sooner or later take out the low. So that was sign number 1, but we had a lot of bullish CVD divergences on the chart. So then we have to think about, okay, if this is a significant low, we need to see one of 3 structures: an impulse, a diagonal, or a double 1-2. For an impulse, we want to see a 1, 2, 3, 4, 5. Well, there's overlap between a wave 1 and a wave 4, which isn't allowed, and wave 2 retrace to the 886, low probabilities. Then we have a diagonal structure, but it is too early to call diagonals, because preferably you only talk about diagonals after a wave 4 is in. And then we have a double 1-2, 1, 2, 1, 2 continuation, but again, your wave 2 hit the 886, lowering probabilities for a double 1-2, which therefore increase the probabilities to take out the lows. Because of all the bullish CVD divergences, there can be a little bit of confusion, but the moment we wicked the high here and locally saw some bearish CVD divergences as well, which I will show you in a second, that was the moment that I started to get interested and also entered my position. On the chart here, you can see all of the different CVD divergences that were active. This one over here already played out when price took the high. This one also played out when we took the high, but this one over here was still active, and the dotted line I had on my chart, that was the target for this bullish CVD. So it played out, price wicked out this high here, moved to the downside, and then we saw the bearish CVD divergence, which was very, very nice indeed. So let me refresh the chart. You can see here, price moving to the downside is initially not yet really interested, but once we broke the structure here and really started to create more bearish CVD divergences, lower highs on price, but look here, higher highs on the CVD, that is when I got significantly interested in a move towards the downside, and now we're ranging at 63.4k. Very, very nice. So if we then look at the probabilities of the different scenarios, then on the 1 hour time frame, at the moment still we're looking for a wave 4 to form. Based on what we still get, I might also add the scenario where wave 1 is then already finished and we're looking for a bigger wave 2 towards the downside. I do think still a wave towards the upside is interesting because of the resistance we have over here, the blue box between 66.6k and 67.1k, mainly because the daily point of control of this volume profile is inside this range, which makes it very interesting resistance for both a wave 5 of an impulse or a potential flat structure for a wave 2 to the downside. On the 15-minute time frame, the probabilities are higher for more. A downside, and a side note is hitting that 382 minimum would work nicely for both the wave B and the wave 2. So potentially first a little bit of a move towards the upside before continuation to the target area being the 6-hour gap top. Hitting the 886 increases probabilities to take out the low, and as you can see we have now hit the 886, so it does increase the probabilities to take out this low, but at least keep in mind the 382 as well. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.